So today I'm going to talk about 5 stocks that I'm watching. So these are stocks that I'm really keeping an eye on and are starting to come quite interesting opportunities to me. And I thought I'd share that with you guys. I did this video a few months ago. You seem to enjoy it. And I've had a few people saying, can you do an updated list of stocks you're watching? And last time I did these 5 stocks, one of them actually made it into the portfolio, which was Lovesac. I mentioned it on the stocks I'm watching. And within a few weeks later, I actually went to go purchase it. I'm now a shareholder in that one. So yeah, they are generally stocks that I do consider. And I won't spend too long on it because doing deep dive on 5 stocks would take forever. So it's only going to be 2 or 3 minutes. I'll say what I like, what I don't like, what's potentially stopping me from buying at the moment. So yeah, hope you enjoyed the video. Just to let you know, there is a Black Friday sale going on the Patreon. That's where I post what I'm buying and selling in real time, as well as 2 exclusive videos a week and also a Discord with 600 members on to talk to about stocks, including me. Yeah, if you sign up at the moment, there's 2 free months. So all you need to do is go on the join bit and it says save 16% if you pay annually. Pay it annually and you'll get them 2 months for free. It's a offer I don't plan to do again anytime soon, and I have limited it to 100 places just because I think it is a pretty good offer. So yeah, I think there's only 50 spots left at the moment, so it has been taken up quite a bit at the moment, and I'm only going to run that for about 4 more days, and then I'll be taking it away. So that's there if you want to take that opportunity. So looking at the first stock is B&M. So I've been looking at this one for a while. I actually think that maybe round about when it dropped to this £3 range, I probably should have pulled the trigger on it, but you know what's happening in that kind of period of time. The whole stock market was getting brought down during that period of time. We had the kind of higher inflation numbers in the US. We had Liz Truss running the UK country there. There was a bit more negativity creeping in there, and since then we've had the kind of rebound. But if it was to get down to that £3 range, which in this year, 2022, I'm never going to say never, maybe it's an opportunity to consider. It's around 10 times earnings, so if I can get that around about 9-8 times earnings, I think that's actually really good. 4% dividend yield, and obviously the lower it goes, the higher dividend yield you get. And I think when you look at B&M, it's obviously a bit of a bargain, discounted store. And I think that even though we could potentially be entering a slowdown in the UK and they might actually get hurt by inflation costs and logistic costs, I don't see the customer environment weakening for them because obviously it's a discounted store. So if anything, I would actually expect the sales to do even better in the next few months or while we enter recession. So yeah, I actually have quite confidence that this would actually do quite well in a positive environment or a negative environment. And I'm sure the plan is obviously to just open more and more stores, and obviously these guys, as they open more and more stores, will obviously create more revenue and more profit. So yeah, I think that when you look at the the previous performance of the business, you can see here they've got a really good track record of delivering growth and profit. The only little thing that really put me off was the balance sheet. There's a little bit high on the debt to equity side compared to where a while ago. That's probably the only negative. But when I look at the dividend looks pretty secure at the moment, around about 43% payout rate. So it looks pretty safe from that point of view. So yeah, that's actually one that I really considered and potentially should have pulled the trigger on a few weeks ago. The next one is Nike. So Nike is hitting a bit of weakness at the moment. You'll see here revenue growth is still not too bad. The thing is that you look at net income. Net income in the last quarter was down 21%. And since around 2022, as we entered this point, you can see here the stock was actually at a 52 high of $173, and it actually touched the 52 close of $82 down here. Same time of weakness that B&M was at. Had a massive weakness here, and when you get to that point of view, you're talking to prices that it was at back in 2019 levels, which obviously is quite interesting. The only problem I have with Nike is that this is one of those stocks that I would like to kind of buy and hold forever, and obviously it should perform very well, collect a dividend, although the dividend is a bit smaller at 1%. The only problem I have with Nike is that, yeah, I mean, it looks like it's on a big sale and it's kind of back to levels close to 2019 levels, but it still trades at 30 times earnings, and that's obviously it's a premium brand, but the problem is this a premium valuation? And potentially that's what's kind of putting me off, Nike. So even though this is having a bit of a decline, I'd like the decline to go lower into that $80 range. If I can get Nike in the $70 range, that would be very interesting then, and potentially could come a buying opportunity. So this is a stock that's falling massive at the moment and a premium brand that I would love to hold for a very long time. However, it just needs to come a little lower. So it's one that I'm watching, and it just needs to come a little bit lower, and I'll consider potentially picking up some shares in Nike. The next one is Walgreens. So same again, this hit a bit of weakness. the same time as Nike. It was down towards $31. It's had a bit of a rebound since then, but you look here, even through the CV situation, this stock has just been on a big downtrend since 2015, and it's just been going lower and lower and lower, and we're kind of getting towards where levels that we're at back in 2011. Now at the moment, Walgreens is going through a bit of a phase where it's trying to revamp the business, it's trying to move into virtual healthcare, and you'll see here why the decline of the business has been is because basically profitability has stayed flat for the last few years, and that's why, unfortunately, what do you need to have a business to do well? You need to have revenue growth, but you need to have profit growth, and Walgreens haven't had that at the moment. But Walgreens at the moment are trying to revamp the company. They're trying to get back to good amounts of growth of 2-3%, keep that dividend, which it's known for, around about that 4% range, and start growing its profitability with some of the acquisitions that it's making, with the moving into the healthcare, with a couple of cuts into the business, which hopefully helps them generate more profit in the long term, or cut part of the business that isn't doing well in there at the moment. So there's a bit of a change around in the business. I'm looking at this one at the moment. You can see here as well, the new CEO came in on the 15th of March. So this is one that I'm really keeping an eye on because it obviously pays a good dividend. It has a good PE ratio. I want to really see like the revamp in Walgreens send them into the profit growth, because that's obviously going to be key to obviously pay the dividend, and obviously will be the success for the share price in the next few years. So I think the valuation is interesting. The big thing is just making sure the business turnaround happens in Walgreens. So it's one that I'm actually just checking on, the quarterly reports quite often just to see how it's doing. But it's quite high up on my list as a bit of a safe, profitable dividend stock. So yeah, I'm keeping an eye on that one. The next one is Skyworks Solution. So these guys are a semiconductor stock, which we know have been hurt. Semiconductor stocks, AMD, Nvidia, they've all been hurt in the last kind of few months. And at the moment, they're all going through this bit of a slowdown situation. The supply chain issues, obviously coming off the CV situation where they all kind of boomed up. And you'll see here that it is now back down at $94, where it was at prior to the CV situation in the likes of 2019, 2018. And this company should offer good growth going forward. It pays a 2% dividend yield. Obviously at the moment they're getting hurt with the same things that like Nvidia and AMD are. The profit is declining a little bit, but the revenue is still growing in the positive direction. And this is a cheaper valuation than say the likes of Nvidia and AMD, although it probably doesn't have the long-term growth as them two. So, I mean, this is a open play where you could have potentially stuck the semiconductors are getting sold off. You could have potentially stuck this, AMD in here potentially. I think that at the moment, the semiconductor space has a bit more pain to go through, but I think generally moving into 2023, there's probably a few semiconductor stocks that you potentially could be eyeing up at the moment. So yeah, this was open for a few semiconductor stocks because a lot of them are being killed off this year, but I think maybe not for the rest of this year, even though there's only a month kind of left. But I think towards 2023, this could potentially be an interesting, or the semiconductor space could be an interesting play. So to keep an eye on that space anyway. So I would say this is probably the last one on this list, but I just wanted to make you aware that the semiconductor space is probably something I find interesting going into next year. Next up is, or the last stock is Wynn Resorts. So Wynn Resorts is actually really frustrating because you look at the US part of the business, it's actually performing really well. The US part of the business is very strong. We saw that the US part of the business is obviously doing well. But the problem is the the China part of the business. The China part of the business at the moment is absolutely killing this business. And the question is what happens there? We know at the moment, the problem is with China at the moment is they are having shutdowns every time they get a couple of cases of the CV situation. They're still having the CV situation pretty bad at the moment compared to obviously like the US, the UK. We've kind of got to the point where if there's a couple of cases, we still obviously stay open now. Whereas in China, there's not really an uptake in the vaccination program. There's still very zero CV at the moment, where if there's a spike, they're closed down. And obviously that's probably what's caused the mess of supply chains through 2020. That's probably what's caused some of the inflation this year, because every time we have it open up, close down, open up, that's caused a lot of problems with supply chains. And that's affecting Wynn Resorts because they've got a big location in Macau, and obviously that brings in good amounts of revenue and profit for the business. and when it's opening up, closing down, people are, obviously it's not bringing at times income in or revenue in, but it's also putting people off from going. You know, people are thinking, well, shall I go? Well, you know, where might we be in a few months' time? Will we be back in a lockdown situation? And it's, you know, putting people off, as well as some of the travel restrictions to go across. So it's a bit frustrating, because if it was a US business on its own and you look at this valuation, you're like, it's not too bad, but you've got that big thing overhanging it. And I keep saying at some point China need to, you know, open back up, because they're just killing their economy and it's not sustainable. And you think, okay, now they're going to get to a point where they go, okay, we're just going to have to open back up. And then they don't, they go back into another lockdown. And I definitely think if anything has proven anything this year, or learnt anything this year, is that China will generally do the opposite. That you go, no, surely they can't, and they will go do it. And it's just that kind of nervous thing of, you can't really buy it at the moment, because you just generally don't know what the government's going to do to this stock, which is frustrating. Because if you knew from now on Macau's just going to be, that's it, they're open forever now, they're not doing any more lockdowns, $75, you'd be like, okay, it's probably worth a buy, Wynn Resorts. But because you don't know the situation, it's a bit hard to buy at the moment. So I really like this stock and I'd like to own it, but there's just that cloud hanging over it at the moment. So yeah, we'll see what happens. But I do really like this one, but the whole China situation just makes me a bit nervous on it. So yeah, we'll see what happens with Wynn Resorts. So yeah, on this list, I mean, I'd say definitely B&M's definitely the closest one. After that, I'd say potentially Walgreens, if they can, you know, turn the business around. I'd say after that, I'd say probably Wynn Resorts, but obviously the whole lockdown situation makes me a bit nervous. And then, I mean, Nike, if Nike hits $80, $70, I think that'll be a really interesting opportunity. And I'd say Skyworks on here probably last, just because I wanted to mention potentially the opportunities in 2023 for the kind of semiconductors plays anyway. So hope you enjoyed the video anyway, guys. Have a great weekend, and I'll catch you in a bit.